Bitcoin is hovering near key resistance levels, and while most investors are focused on the price of BTC, the real opportunity could lie with Bitcoin miners. Specifically, Riot Platforms, ticker symbol Riot, might be one of the highest leverage ways to play the next crypto breakout. This isn't just another speculative rally. Riot's story is one of timing, infrastructure strength, and a powerful expansion strategy. With access to cheap energy, institutional-grade operations, and a vertically integrated business model, Riot could be setting up for a breakout of its own if Bitcoin surges. If you're looking beyond headlines and into high upside opportunities, you're in the right place. Subscribe to Stocks Telegraph, give this video a like, and let's dig into why Riot could be the most compelling crypto stock to buy before Bitcoin takes off. Riot Platforms is one of the largest Bitcoin mining operations in the US, with its massive Rockdale, Texas facility delivering around 700 megawatts of capacity and a new 400 megawatt Corsacana site underway. Riot is building out a mining footprint that's unmatched in scale. What sets Riot apart is vertical integration. It doesn't just mine Bitcoin, it controls the power infrastructure, hardware, and strategic partnerships that make large-scale mining possible. That means greater resilience, better margins, and the ability to generate revenue from more than just mining. Riot is even exploring AI and HPC applications at Corsacana, paving the way for diversified future revenue streams. Bitcoin is currently consolidating, but that quiet phase could be setting the stage for a breakout. Historically, when Bitcoin enters bullish territory, mining stocks like Riot have amplified those gains. In the 2021 cycle, Bitcoin surged 551%, while Riot soared 1,570%, almost 3 times the return. That amplification happens because mining revenue scales directly with Bitcoin's price. As BTC rises, Riot earns more per coin and improves its margin per terahash. On the flip side, during downtrends, miners suffer more than the coin itself. That's why Riot is a high beta play, risky in bear markets but explosive when crypto rallies. With growing institutional interest, especially from spot Bitcoin ETFs, the macro environment is increasingly supportive. Supply is tightening, on-chain data shows strong accumulation, and miners, especially low-cost ones like Riot, are positioned to benefit from improving economics. Riot's biggest strength lies in its infrastructure. At both Rockdale and Corsacana, it operates on extremely low-cost power, just 3.8 cents per kilowatt hour, thanks to direct access to the Texas grid and its ability to participate in demand response programs. In May 2025, Riot earned $1.6 million from curtailment credits alone, showing that its power agreements aren't just cheap, they're strategic. The company's uptime advantage allows it to adjust operations based on power prices, maximizing profits during favorable conditions while reducing costs during spikes. Riot's hash rate has climbed from 14.7 EHS in mid-2024 to 35 EH now, a 260% year-over-year increase. With its scale and efficiency, Riot can mine BTC at estimated costs of $40,000 to $70,000 per coin, well below current market prices. Corsacana is the crown jewel of Riot's future growth. Spanning 265 acres in Texas, it's already running at 400 megawatts and is expected to scale to 1 gigawatt by 2026. The first phase has delivered a hash rate of 15.7 EH per secs, helping the company reach 35.4 EH per set overall. But here's where Riot shifts strategy. Instead of pushing forward with 600 megawatts more of Bitcoin-only infrastructure, the company is now evaluating AI and HPC opportunities for the remaining capacity. With land, substation infrastructure, and connectivity already secured, Corsacana could become a hub for more than just mining. That pivot suggests Riot is playing the long game. By attracting hyperscale clients, or HPC contracts, it can generate more stable revenue and diversify risk, especially valuable in a volatile crypto environment. In the first quarter 2025, Riot delivered $161.4 million in revenue, up 104% year over year, driven by stronger mining results and early-stage HPC developments. Gross profit reached $73.6 million, with a 46% margin, reflecting improved operational efficiency. However, the company also reported a net loss of $296 million, largely due to accounting for its BTC holdings and infrastructure investment. Riot spent over $200 million this year building out Corsacana, but it ended the quarter with 19,223 BTC on its balance sheet, valued at $1.59 billion, and secured a $100 million credit facility with Coinbase. Despite the loss, the fundamentals are improving. Riot's margins are expanding, revenue is growing, and it has the liquidity to execute its vision without immediate dilution. At a market cap of around $2.9 billion, Riot trades well below peers like Mara and CLSK in terms of recent highs, hovering around 39% off its 52-week peak versus to 53% for others. Analysts are bullish. The average 12-month price target is between $17 and $17.35, suggesting around 80 to 100% upside from current levels near $9 to $10. Guru Focus estimates Riot's fair value at $13.11, roughly 29% higher. Riot is undervalued compared to its growth, balance sheet, and infrastructure moat, making it a potential bargain if BTC continues climbing. The April 2024 halving reduced Bitcoin block rewards, but Riot's first quarter revenue still soared, showing resilience. Historically, halvings lead to tighter supply, stronger miner margins, and explosive miner stock rallies in the months that follow. Spot Bitcoin ETF flows are rising. Analysts like Bernstein now project Bitcoin reaching $200,000 to $225,000 by year-end. Riot's US-based operations, regulatory compliance, and grid partnerships make it an attractive, scalable infrastructure play for institutions. Of course, Riot is not without risks. Bitcoin's price volatility is a double-edged sword. It magnifies gains, but also deepens losses in downtrends. Any drop in BTC could quickly pressure Riot's margins. Finally, building out Corsacana to 1 gigawatt by 2026 is a massive undertaking. Delays, cost overruns, or infrastructure hiccups could derail the growth story. Despite the risks, Riot remains one of the most asymmetric Bitcoin trades available. It's a high beta name that has historically amplified BTC rallies by 2 to 3 times. If Bitcoin climbs to $150,000 or beyond, Riot could easily double or triple, especially from current levels near $9. With its power advantage, expanding hash rate, growing institutional interest, and potential pivot into AI HPC, Riot isn't just a Bitcoin miner anymore. It's a digital infrastructure company with optionality. Riot Platforms looks like a high-risk, high-reward bet that could pay off big in 2025. Its vertically integrated model, scalable infrastructure, and pivot into new technologies position it as more than just a miner. It's becoming a platform. The next few quarters will be key. If Bitcoin breaks out, Riot could be one of the biggest winners. If infrastructure contracts land at Corsacana, it could unlock even more upside. And if you're looking for a leveraged way to ride the next Bitcoin wave, Riot just might be your best shot. Let us know in the comments. Are you buying Riot now or waiting for the next move? And if you found this breakdown helpful, smash that like button, subscribe to Stocks Telegraph, and turn on notifications so you don't miss our upcoming videos on the top crypto ETF movers, hidden blockchain infrastructure plays, and post-halving winners. See you in the next one.